Wow, 20,000. Can you believe it? The Nasdaq just blew past 20,000 for the first time ever.
It's kind of like watching financial history happen right in front of us.
It is. And from what I'm seeing, this surge is driven by, well, tech stocks
Oh,
mostly.
yeah, without a doubt. Tech is the powerhouse behind this record-breaking run.
Yeah.
But it does make you think, like, how much are we banking on this whole tech centricity?
That's the big question, isn't it? And it's not just me saying this. All of our sources today, like, stock performance, economic trends, global stuff, it all points back to tech as this like unstoppable force.
It really does. It's like a financial news flash, but way more insightful.
Exactly. So whether you're prepping for a meeting, keeping up with the market, or just super curious about what's going on, this deep dive is for you. We're going to give you the most relevant, the most insightful takeaways from all this data.
Exactly. Insightful takeaways. And speaking of insightful, let's talk about this NASDAQ thing, this 20,000 mark. I mean, hitting 20,000 is huge, even if you aren't like a hardcore stock market follower.
Yeah, so for someone who isn't glued to the stock ticker every day, why should they care about what the Nasdaq is doing?
Well, think of it this way. The NASDAQ is kind of like a gauge, right? It measures the overall economic confidence, especially when it comes to innovation and future growth, things like that. When the NASDAQ is strong, it usually means investors are feeling pretty good about the future. They're betting on new ideas and tech advancements. But here's the thing. It's not as simple as just, yay, tech good, NASDAQ up.
What do you mean?
There's this interesting paradox going on. Right now, the top 10 companies on the NASDAQ, they represent a massive 59% of the whole index's value.
59%, that's more than half.
It is. It's a huge chunk, way up from 45% just a few years ago.
So what's the catch? I mean, these are the big players, the giants. They must be doing something right.
Oh, they are. They absolutely are. Their innovation, their market dominance, it's undeniable. But, and this is the big but, what if one of these giants stumbles?
Like, what if their tech becomes obsolete or they face some massive unexpected challenge?
Exactly. Or what if some brand new technology comes along and disrupts their whole model?
That would shake things up, for sure.
It would impact a huge chunk of the market.
It's like all our eggs in a few very, very large baskets.
It really is. It's this high-risk, high-reward scenario playing out on a massive scale.
Okay, so even with all the excitement around the Nasdaq hitting 20,000, there's this underlying layer of, well, complexity and maybe some caution.
Definitely some caution. You always got to look at the bigger picture.
All right, so speaking of things that are kind of complex, one thing that kept popping up in our research for today was this whole AI thing. I mean, it's everywhere, right? And it's not just hype. AI is actually changing how finance works from the ground up.
Oh, absolutely. It's not just a buzzword anymore. It's the real deal. One of the most interesting areas where AI is making a huge impact is personalization, like hyper-personalization in financial services.
Okay, so like, what does that even mean?
It means that companies, like Stripe and Square, for example, they're using AI to, well, not just crunch numbers. They're using really sophisticated algorithms, machine learning stuff, to analyze how people are spending their money, predict what they might need, and even give them personalized financial advice, all in real time.
Hold on, so instead of getting some generic financial advice, AI can actually tailor recommendations specifically for me based on my spending habits.
Exactly. That's the power of it. These AI systems, they can go way beyond the traditional financial analysis. They dive into behavioral patterns, learning from your actions, adapting their guidance based on what you actually do.
So it's almost like having a financial advisor who lives in my phone.
It's kind of like that, yeah.
Uh,
An advisor who knows your habits inside and out and constantly tweaks your saving strategies, investment recommendations, all that.
Wow, that's kind of mind-blowing and a little bit creepy, if I'm being honest.
I get it. It's definitely both.
I mean, it could be incredibly valuable, but there's also that whole question of data privacy and what if these algorithms have biases?
You're right. Those are super important considerations. As AI becomes more intertwined with our financial lives, we need to make sure these systems are transparent and fair.
Absolutely. And speaking of groundbreaking technology, did you see the news about Alphabet's Willow quantum chip?
Oh, yeah. That's a game changer, potentially.
I mean, it's not just for tech. It could impact so many industries.
It really could. Willow is a huge leap forward in quantum computing. And the potential applications, they're just vast. I mean, think about it. Quantum computers, they use the principles of quantum mechanics to do calculations. Calculations that regular computers can only dream of.
So they're basically superpowered brains.
In a way, yeah.
Mm.
They can tackle insanely complex problems in finance, medicine, material science, you name it.
So we could be talking about like super accurate financial models, new drug discoveries, even optimized energy grids.
Exactly. We're talking about transformative breakthroughs across the board.
It's almost like we're on the cusp of a whole new era of technological advancement.
It does feel that way. And as these technologies evolve, they're going to completely reshape the financial landscape.
Okay, so we've got the Nasdaq surging, largely fueled by these tech giants, and then we have AI and quantum computing emerging as these powerful forces. It's a lot to keep up with. But let's shift gears for a second and talk about something else that's been gaining momentum. Green finance. It's like sustainability isn't just a buzzword anymore, it's becoming a core part of how finance works.
It really is, and I think it's about time. People are starting to realize that, the environment, social issues, they're not separate from finance. They're deeply intertwined.
Yeah, it's like people are finally connecting the dots between their money and the health of the planet.
Exactly. And that realization is driving the growth of green finance in a bunch of different ways. For example, we have companies like Ecolytic. They're using tech to help people understand the environmental impact of their spending.
So, like, if I buy a cup of coffee, I can actually see its carbon footprint.
Yeah, exactly. That level of transparency is powerful. It can encourage people to make more conscious choices.
I can see that. And what about on a larger scale?
On a larger scale, we're seeing the rise of ESG investing,
ESG, what's that stand for?
environmental, social, and governance. It's basically a way for investors to align their portfolios with their
So,
values.
like, putting my money where my mouth is.
Exactly. ESG scoring systems evaluate companies based on their impact on the environment, how they treat their employees, their overall ethics, things like that.
So you can actually choose to invest in companies that are doing good in the world and avoid the ones that are, well, not so much.
Exactly. And this trend is being pushed forward by both consumers and regulations.
So it's kind of like a pincer movement, pressure from both sides.
You could say that, yeah. Governments are encouraging sustainable investments, and consumers are demanding companies to be more responsible.
So it's this combination of top-down and bottom-up pressure that's creating this shift towards a more sustainable financial system.
That's a great way to put it. And this momentum is only going to get stronger.
That's good to hear. It's encouraging to see the financial world embracing a more holistic view, one that considers not just profits, but also the well-being of people and the planet.
It's definitely a positive shift, and it highlights the interconnectedness of everything. Our financial decisions, our social values, and the health of our planet, they're all connected.
All right, so in this first part of our deep dive, we've covered the Nasdaq's incredible run, the transformative power of AI, and the growing importance of green finance. It's clear that the financial world is changing fast, and there's a lot to keep track of.
There is. And in this fast-paced environment, it's more important than ever to really understand what's happening and to make smart decisions that are in line with your goals and values.
Couldn't agree more. We'll be back soon with part 2, where we'll explore some more fascinating trends shaping the financial markets.
So stay tuned. We've got a lot more to unpack. So, before we move on, I wanted to kind of circle back to something we talked about earlier, the whole NASDAQ concentration thing.
Right, right. The fact that, what was it, the top 10 companies make up like almost 60% of the index's value.
Exactly. It's a pretty incredible stat when you think about it. It shows just how much influence these tech giants have. But like we were saying, it also raises some red flags.
Yeah, I mean, it's great that they're driving growth, but it also makes the market kind of vulnerable, right?
Exactly. That's the key point. It's like imagine if imagine if one of these giants, I don't know, faced some major setback.
Like what? A big regulatory challenge, some new tech that comes out of nowhere and disrupts everything.
Exactly. Or even just, consumer preferences shifting.
Mhm.
Any of those things could have a huge ripple effect on the entire market.
It is kind of scary when you think about it. I mean, these companies seem so invincible right now.
They do. But the thing is, things can change so fast, especially in tech.
That's for sure. So even though everyone's excited about tech right now, we got to stay balanced, right?
Absolutely. A balanced perspective is key. Diversification, that's the name of the game. Even in a market where it seems like a handful of companies are winning everything.
Makes sense. Don't put all your eggs in one basket, or in this case, a few very large baskets.
Exactly. Spread the risk, different sectors, different asset classes. It helps you weather the storms.
All right, so staying on the topic of tech, let's zoom back in on AI. We talked about how it's, driving personalization and finance, but it's doing a lot more than that, right?
Oh, yeah, for sure. AI is popping up everywhere. One area where it's proving to be super valuable is in risk assessment and fraud detection.
Oh, interesting. How's that working?
Well, financial institutions are using these really advanced machine learning algorithms to analyze mountains of data,
Yeah.
like in real time, looking for any tiny patterns or anomalies that might signal fraudulent activity.
That's pretty smart. I mean, AI is great at recognizing patterns, so it seems like a perfect fit for that.
It is. It is. These algorithms, they can learn from all the historical data, identify emerging trends, and they can even adapt to new fraud tactics as they pop up.
So it's kind of like having, I don't know, a super-powered security guard constantly watching over your accounts.
I like that analogy. It's very fitting.
Especially with all the cyber threats out there these days, it's reassuring to know that AI is helping to keep things secure.
Absolutely. It's playing a vital role in keeping our financial systems safe. And as AI keeps getting smarter, its role in risk management and security is only going to grow.
Okay, so that's AI and security. Now, let's switch gears again and go back to the global economic picture. Remember those mixed signals we talked about earlier?
Oh, yeah, those were definitely interesting, a little bit confusing even.
On one hand, we have inflation that just won't quit, which is putting pressure on the Fed to keep interest rates high. But then we also have signs that the economy might be slowing down, like unemployment claims going up, businesses getting more cautious, that sort of thing.
It's a tricky situation, that's for sure. It's creating a lot of uncertainty for, well, everyone. Policymakers, businesses, investors.
And the Fed is stuck in the middle trying to control inflation without causing a recession.
Right. It's a delicate balancing act, no doubt about it.
I bet they're feeling the pressure.
I'm sure they are. It's like trying to, I don't know, walk a tightrope during a windstorm.
And this isn't just a U.S. thing, right? We're seeing similar challenges in Europe and other parts of the world.
Absolutely. It's a global phenomenon. It just shows how interconnected all our economies are these days. What happens in one part of the world can definitely have ripple effects everywhere else.
So staying informed about global trends is more important than ever.
It is. And, speaking of global trends, let's touch on sustainability again. We talked about how green finance is gaining momentum, but it's not just individuals making eco-conscious choices anymore. There's a much bigger shift happening, like at the institutional level.
You mean like pension funds, big investment firms, those kinds of players?
Exactly. These institutional investors, they're starting to factor sustainability into their decisions in a major way.
So it's not just about feeling good, it's about protecting their investments too.
That's a big part of it. They're realizing that, climate change, resource scarcity, all these environmental and social issues, they pose real financial risks.
So they're thinking long term about how these issues could impact their returns down the line.
Right. And this shift in perspective is putting pressure on companies to clean up their act, so to speak. Investors are looking closely at their environmental impact, their social responsibility, their governance practices. They want to see that companies are managing these risks effectively and contributing to a more sustainable future.
So it's like the more investors demand sustainability, the more companies have to adapt.
Exactly. It creates this virtuous cycle,
Makes sense. The companies that are doing good become more attractive to investors, which encourages other companies to follow suit.
That's the idea, and I think this cycle is only going to accelerate in the coming years.
It's definitely encouraging to see sustainability moving from the sidelines to the mainstream of finance. It's like we're finally recognizing that, our financial system is connected to the health of the planet and the well-being of society.
It's a promising development, that's for sure. It shows that finance can be a force for good, a way to shape a more sustainable and equitable future.
Absolutely. Now, switching gears one last time, I was reading about the Swiss National Bank's decision to cut interest rates, and it seemed like a pretty bold move, especially with everyone else trying to fight inflation.
Yeah, it was definitely unexpected. But the Swiss National Bank, they have their reasons. They're trying to prevent the Swiss franc from getting too strong, which could hurt their exports.
So they're basically trying to make their currency less appealing to foreign investors?
In a way, yeah. It's all about managing the exchange rate.
It's fascinating to see how central banks around the world are using all these different strategies to deal with these economic challenges.
It is. Each country has its own unique situation and priorities. And it just highlights how complex and interconnected the global financial system really is.
Okay, so we've covered a lot of ground here. Economic uncertainty, global trends, AI, sustainability.
It's a lot to digest, that's for sure.
But hey, that's what we're here for, right? To break it all down.
Absolutely. And the key takeaway, I think, is that staying informed is more important than ever, especially in this fast-paced, constantly changing world.
Right. The more you understand about how things work, the better decisions you can make. So as we wrap up this part of our deep dive, I want to remind everyone that this is just a glimpse into the world of finance.
There's always more to learn, more to explore,
So we encourage you to check out the full list of sources we used.
and dive deeper into the topics that pique your interest,
We'll be back soon with the final part of our deep dive.
where we'll bring everything together and leave you with some food for thought.
Well, we've covered a lot of ground in this deep dive, haven't we?
We have. It's been quite a journey exploring all these different aspects of the financial markets.
From the Nasdaq hitting 20,000 to AI changing everything and the global economy being, well, kind of unpredictable.
Yeah, a lot to unpack for sure.
But as we wrap things up here, I think the biggest takeaway for me is that today's financial markets, they're just so dynamic.
Dynamic and interconnected.
Yeah, exactly.
Right.
And full of opportunities, but also risks, of course.
It's a landscape that really demands, that you stay aware and adapt.
Adapt quickly, too.
Absolutely.
On the one hand, we've seen all this amazing innovation, especially in tech, and it's driving the markets to new heights, it seems like, every day.
It's true, the pace of change is incredible.
But then on the other hand, there are those warning signs we talked about.
Right, the inflation that just won't go away.
Yeah, and the possibility of the economy slowing down and the whole concentration risk with the Nasdaq.
How very real concerns.
It's a lot to take in, can be kind of overwhelming, to be honest.
It can be, but that's why it's so important to make informed decisions.
Decisions that are right for you, right for your situation.
Exactly. It's about understanding the forces at play, evaluating the risks and the potential rewards, and ultimately making choices that align with your own financial goals and values.
That's a great point. Aligning your financial decisions with your values. It's not just about chasing returns, it's about using your money to shape the future you want.
I couldn't agree more. In this world where everything seems to be driven by algorithms and data, it's easy to lose sight of the human element.
Absolutely. I mean, financial decisions, they're ultimately about people.
That's right. People's goals, their aspirations, their dreams.
So it's about finding that balance, using data and insights, but also trusting your gut.
And always remembering that your financial choices, they should reflect what's important to you, what you want to achieve.
It's about having a purpose, a reason for the financial decisions you make.
Exactly. And as we wrap up this deep dive, that's the question I would leave you with. How do you plan to adapt and thrive in this ever-changing financial landscape?
It's a big question, but an important one. Because as we've seen, the financial world is full of challenges, but also full of possibilities.
It's up to each of us to navigate this landscape, make informed decisions, and create a future that aligns with what we truly value.
Well said. And that's it for this deep dive into the financial markets. We hope you found it insightful and engaging, and maybe even a little bit inspiring.
We encourage you to explore the sources we use today.
Dive deeper into the topics that sparked your interest.
Thanks for joining us on the Deep Dive.
Until next time, stay curious, stay informed,
And stay in control of your financial journey.